Good afternoon. My name is Scott Rudd, the Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead.
观众朋友，大家好，欢迎收看今天的直击美股，我是主持人Zhao。周三市场迎来了2份重磅经济数据，一份是开盘之前公布的 ADP 私营就业数据。ADP 私营就业数据素有小非农之称，而这一份数据呢，告诉我们9月份的私营就业人口不及市场的预期。而同时在开盘之后呢，我们又迎来了9月份的 ISM 非制造业指数，这一份指数却是出乎意料的好。那么这2份指标综合在一起，能够给将会在周五公布的非农带来什么样的启示呢？ Hi Scott, market bounced on mixed economic data, including the less than expected ADP and better than expected ISM. What does this mean a couple days ahead of the big job report? And as you know, October is well known as the most volatile month of a year. What is your trip for October?
Well, if it's the most volatile month, right now the volatility is constricting. So usually you constrict and then you expand. So right now, if you look at the chart of the S&P cash, I think both sides, are not exactly sure what's going on. Why do I say that? Because look, first of all, here is your post-Brexit low that wound up holding higher, and that yielded you a nice breakout right at actually a jobs report that was from July. So now here we are. You could draw a trend line, okay, from that post-Brexit low that's right here. So the bearish argument would be, okay, we're going to break and close below 2145, and that's going to give us, a move down to 2120 really fast. But first you have to break below that. The bullish argument is, hey, there's rotation, there's money going everywhere. Look at this tight descending channel, okay, kind of like what you had here before breaking to the upside, and that if we get a close above 2165 to 2175, we could be on our way to all-time highs. So I think there's a valid argument for both. So I'm going to wait and see which way this resolves, okay? And it might take a little bit more time, but I think come Friday, we might know whether the bulls will take the ball or we're going to retrace back down and the October goblins might, scare some of the bulls.
This morning we got the EIA number, and the U.S. crude inventory fell by 3 million barrels. Surprisingly, the OPEC deal didn't bring back U.S. production. Now oil price is threatening $50. Did we break the range, and where are we looking next? 60 or possibly 70?
70? that would probably take some of the shorts to the cleaners. But what's important is switching gears, because sometimes oil's been a tailwind or a headwind. Okay, most of last year or the last 2 years, oil has been a headwind. And then if you remember last week when we were talking about what happened, you had the potential deal and then oil engulfed its range. What do I mean by engulfing its range? Well, look at the USO. I just showed you a descending channel in the S&P cash. Well, look what happened from the lower level when the USO took out this spot. So this reclaimed the 8 and 21 day, took out the pivot, and now look where we are above the 200-day moving average. The XLE, which are these oil names, your XOM, your Chevron, your this, your that, okay? Look what happened here. It also engulfed, ignited, that means at least cover your shorts, and held the 8 and 21 day, then held again, and now it looks like we're going back to highs. And on a macro level, look, for the first time in 2 years, we've been above the 200 day, showing some institutional support for multiple months. So I think the oil names, will provide some alpha moving forward. And do I think 70? No, but could we be 52 to 55? Maybe.
Well, tech is obviously having a very strong year. The S&P tech sector gained twice as much as the broader S&P, and stocks at Amazon surging all-time high. Also, a lot of buzz around Google after yesterday it announcing getting into hardware takeover chatter has driven Twitter 30% higher over the past 2 weeks. Now, my question is, with the earnings season coming up, how do we hedge the downside risk? What if we come up with underperforming and fundamentals?
Well, that's a lot of questions in a short time period, but technology is leading, and traders do like when technology leads, because typically the fastest moving stocks out there. And if you look at the Qs, okay, which could keep you from being too bearish, because everyone always says the world's going to end. Well, at this point, it's hovering above the 8 and 21 days. So this still looks good. And with a little power, it's going to be at all-time highs. All right, what you said about Amazon is right on the money. It's good to have leaders. And this one's been leading, and we listed this down here. Okay, when it broke above this pivot, broke above this pivot, and now you're at all-time highs. Okay, Google, though, is, I think the street's not sure. Okay, you had your event yesterday. It's still above the earnings gap here. But, I was long this today, and the Dow was up 120, and it was negative. Maybe they think that this is taking over Twitter, not CRM. And if you look at Twitter, in my disclosures, I've been long Twitter options probably since around here. And I also put on a chart on Twitter, look at that, when the LinkedIn deal happened back in June. Okay, so some of you guys have options from here. So my question was, should we sell some here? I would sell a third or half because I do think if a deal happens, you know, it's not going to be much higher than this, but I would think if CRM does it, it could be 26 to 28. If Google does it, it might be closer to 30.
All right, that's what we have today. 感谢您的收看，我们明天再见。